Hey, Rod. It's time to take a look at a few American stocks. Let's see what's happening today and highlight the key points that I hope will help you make well-informed trading decisions. Let's get started. And today we'll start with Palantir and its monthly chart. The trends and levels are still relevant. At the moment, the price has broken through the upward trend. Last time, I suggested that this move was a manipulation, where most retail traders would be selling because the level and trend had been broken, and the one who orchestrated this manipulation would be buying from them, pushing the price up. Today, we see clear confirmation of this. Yes, the price has returned to the range above the broken level, but it still hasn't come back within the boundaries of the upward trend. I think it's just a matter of time because there haven't been any significant sell offs during this move, and there still aren't. Now, let's take a look at the daily chart. In previous reviews, I suggested that the price would drop below the $125 level to collect liquidity and then continue to rise. So far, everything is going according to plan. Next, I expect a breakout from the downward trend. One of the key levels is the price range of $150 per share. This will be the nearest target for the current move, where we'll need to watch how each side reacts. I'm sticking to my previous chart expectations. So, for those who are holding shares in their portfolio, in my opinion, this is the perfect setup for continued growth. Everything is pointing exactly to that right now. There's no reason to get rid of the asset just yet. If everything goes the way I see it, the asset is in for a strong rally, and the long term target can be set at $300 per share. It's unclear how long it will take to reach that target, but for now, there's no doubt that the asset is headed in that direction. Next up are Oracle shares and their monthly chart. The price has broken through the upward trend and approached its historical low. The intentions of the players are still not entirely clear. The volume suggests a sideways movement is forming, but I can't say that with absolute certainty. I'll be waiting for clear moves and efforts that will indicate new intentions. So I'll refrain from making any chart-based predictions. Now, looking at the daily chart. For now, the future intentions are still unclear. Selling is increasing, but in recent days, significant buying has started to appear. I don't rule out the possibility of the price dropping below the current level, but whether the price will bounce back is a big question. Based on everything mentioned above, let's sum up. We need to wait for a strong move in one direction or the other to determine the player's next intentions. So, for those who are holding shares in their portfolio, the most positive scenario at the moment is for the price to move sideways within a range. But that's only if the current low holds. All other possible scenarios point to a further decline. All that's left is to wait for strong buyers to appear, which I hope we'll see in the next review. Next, let's take a look at Intel shares. On the monthly chart, as I predicted earlier, the price has started a correction after a rapid rise. If everything goes as I expect, I anticipate the correction will end in the highlighted zone, in the price range around $75, after which I hope the asset's growth will resume. So far, everything points to this scenario, and I'm sticking to my graphical expectations. Now let's take a look at the daily chart. Last time, I warned that this breakout upward from the sideways range could turn out to be a manipulation, and that's exactly what happened. After updating its highs, the price started to fall and has already dropped below the boundaries of the sideways range, which confirms my suspicions about a deeper correction. Selling volumes are increasing, but so far they remain within normal limits. This could indicate a future resumption of price growth. I admit that the anticipated growth could start from the current levels, but in my opinion, it would make more sense for the price to return to the $70 to $75 range to close the historical gap. Therefore, for those who hold shares in their portfolio, there are two possible scenarios. Either the price will start to rise from the current levels, but for that to happen, we need to wait for the current downward trend to break. Or, if the trend continues, the price will fall to the $70 to $75 range, after which I expect growth to resume. It makes sense to buy shares only after a correction to the $75 level or after the current downward trend is broken. Next, Microsoft shares. According to the monthly chart, the trend levels remain relevant. The price continues to move in an upward trend. In previous reviews, I highlighted the $350 level as key for further analysis. The price has reached it, but so far this level hasn't been broken, so it's necessary to keep watching the player's efforts. There's no need to rush to conclusions, and I think that continuing to move within the upward trend remains the main direction. But if the $350 level doesn't hold, it will mean a further drop in the asset's price down to $200 per share. Let's take a look at the daily chart. In the previous review, I suggested that after reaching the $350 target, the movement would continue toward the $400 price range, which is exactly what happened. Next, we need to watch how the price reacts at this level. That reaction will determine the future direction of the movement. If the price is pushed back down to the $350 level, there's a very high chance that the lower level won't hold, and we'll see the asset continue to fall. If the price doesn't encounter resistance at the current level, then we'll see the growth continue, at least up to $450 per share. At the moment, I don't see any resistance. Sales volumes are minimal, and in this amount are not enough to hold the price. That's why, for those who hold shares in their portfolio, the $350 per share level remains the key point for making decisions. If the price drops below this level and stays there, it'll be a strong sell signal for this asset. For now, I consider buying the asset at current levels to be risky. Even though the price continues to move in an upward trend, right now there is a struggle between both sides, and only time will tell how it ends. Only if the price rises above $450 per share will it show that buyers intend to push the price further. That's roughly how I see events unfolding. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we make assumptions, but the market decides.